Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen. It is the Fed day. So, look, I'm not going to drag this intro for too long. Basically, stick around. We're going to talk markets. We have a big day today, yeah, we'll go from there. As always, don't forget to ask questions. There we go. Ladies and gentlemen, I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. It is the 18th of June, if I'm not mistaken. Still 2025. Yep. Look, we have a busy day, and probably more of a busy evening, or depends where you are. But anyway, look, we have the Federal Reserve interest rate decision today. Honestly, I'm going to talk about all that in a bit. Before we jump any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yeah, just going to, oh, by the way, my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Good morning, everyone. I hope everybody's having a wonderful start of Wednesday. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, now then, ladies and gentlemen, the economic calendar today, I want to start off with this one first, actually. Let me just jump into our correct day. So we got the UK inflation number for the core and the headline. So the year-on-year headline came out at 3.4, a little bit lower than the previous. Core year-on-year came out lower than the previous as well. Now, look, what can I say? So far, so good. But again, this was the May number, so let's not get way too excited. You know, of course, this lower number supports the BOSE interest rate cut, but like I said, let's not forget that we have June, when we had quite a big jump in oil prices. So yes, those could impact the June number, the inflation number. So we'll keep an eye on that one. For now, like I said, it's the numbers are on the lower side here, but it's probably just kind of taking a pause right now. You know, taking a pause before another possible jump, because so far inflation numbers, UK inflation numbers, the headline year-on-year figure, has been kind of gradually pushing higher back up here. You can see by this chart. This has been since September of 2024. We were pushing to the upside. Of course, don't get me wrong. You know, last time when we were at here, that was back in 2022. The market was also going crazy, and well, we're of course on the lower side right now, but still, we always measure everything relatively to, you know, current economic situation. And at the moment, yes, this kind of supports, like I said, to the idea of cutting rates. Cutting rates further, but the question, how far, you know, can UK go? Because at the moment they're kind of around the Fed's range. You know, the UK's interest rate is at 4.25. To drop it a little bit more, hey, why not? That's what the lower inflation numbers are here for, right? And by the way, the next UK interest rate decision will be, let me just double check very quickly. The 19th of the 19th of June. Is that correct? Let me just double check very quickly. Interest rate decision. There we go. Tomorrow. So tomorrow we're going to get the interest rate decision, and at the moment the forecast is for the number to stay the same. again, like I said, inflation came out on the lower side. Maybe, the BOE could kind of be tempted and go for that little cut, drop it to 4% in order to boost economic growth. The issue there, of course, is that everybody right now is talking about higher inflation later on. And like I said, like I just mentioned as well, the June figure, that's what probably markets could be worried about. And again, it's a very tricky moment. Like, if in a way you know that the June number could be on the higher side, so hey, why, maybe you should maybe drop it now in order to be able to hike later again, because it's always better to hike from lower numbers, right? But again, that's a debatable. That's a question for discussion. And somebody might say, but hey, because we don't want to escalate this further, we don't want to fuel higher prices later, and that's why we're just going to stick to the current interest rate. Again, like I said, it's all debatable. It's all very much up in the air. But certainly the fact that inflation kind of slowed down a little bit. Again, is that if I think that what the BOE could say is that they need to see inflation kind of slowing down for 2 more readings or something like that, for 2 more months, and maybe then they could consider cutting a rate. Right now, yes, most likely they will stay with the same 4.25, but in general, it's good to have options, and maybe, like I said, there are some grounds for a rate cut, but maybe, like I said, not enough data we have right now on inflation in order to kind of go for that cut, because again, everybody's worried also about June. Right now, like I said, looking at the economic calendar for today, apart from the there we go, stumbling there. Apart from the UK inflation, we get the EU inflation as well. So something to keep in mind. That one number is expected to drop. Well, that one is expected to drop below 2%. So look, certainly this all kind of supports the idea of the ECB to continue cutting rates, because we know that their current rate stands at 2.15. So hey, and we're expecting further cuts, maybe going into the future. Like I said, maybe they will pause during the next meeting in July, at the end of July. Maybe they will just take a little pause to see how everything goes. But because I don't think that maybe they're ready to drop the interest rate below 2%. Again, just a thought there, but also debatable. Let me know what you think yourselves. So yes, we're keeping an eye on the EU inflation numbers. The core one is also expected to decline. So yes, everything is kind of pointing towards lower areas. Now, look, on one side, you would say, hey, that's great for the consumer. On the other hand, it's kind of signaling that maybe not all is good in the EU economy, because again, you need a little bit of inflation. You need inflation to, I think, around 2%. That kind of shows a moderate growth, but you need a little bit of inflation to show growth, that there is something happening. But of course, with the current tariff issue, that's something that the market is worried about. And because again, like UK reached a deal with the US, now the EU is kind of worried that maybe they're not going to reach a deal. So long story short, for now we're watching the numbers. It's going to be very interesting to see what's going to happen in a few hours. What kind of inflation are we actually going to get? That number dropping below 2%, or actually maybe it's going to come out at 2% itself. And this way, maybe, like I said, this way it could support the idea of the ECB kind of stalling with the next, rate decision, kind of not doing anything and basically keeping it at 2.15 for now. So yes, and that's in terms of the CPIs from Europe. We are getting from the US today the MBA 30-year mortgage rate number, so that's going to be quite interesting because we're watching this one again carefully because we want to see if this is not going to jump above 7%. It came very close in May. Then it slowed down. So look, if it jumps somehow back above 7%, that's kind of that could create a few worries in the U.S. economy. And of course, some building permits and housing starts from the U.S. Then EIA crude oil imports and stock change here. But of course, the main kind of event is the Federal Reserve interest rate decision. But look, I'll get to that in a bit. Let me just first go through the Japanese index here, Nikkei 225, and look at this beautiful thing here. Oh, why did this? These are the futures. Let me just adjust this very quickly. Where did my Japan 225 disappear? The cash index, because this is what I think somebody's meddling with my list. Let me just double check here. Japan 225. Let's have a look. Where's my? These are the few. Okay, look. You know what? I'll jump into the main index very quickly. So yes, there we go. Nikkei 225. Look at this. Now, look. I talked about Nikkei recently, and I had a morning note from that we produce. I wrote yesterday that. It seems like we're forming something of an inverted head and shoulders pattern, and look at this beautiful thing. There we go. Boom. We clear the upper side here. We clear this key resistance barrier. We clear the 38,500 zone. We pushed above the so-called neckline here of this pattern, and okay, everything is great. Life is beautiful for the bulls. So what's next? Well, next for me is the 39,581 zone marked by the high of the 13th of February. So this is what I'm going to target. If that gets cleared, my next target is the 40,400 zone marked by the highest point of December of 2024. And then we'll go from there. So for now, everything is pointing more towards the upside. Everything is okay. I like it. Let's see how this plays out. For now, in terms of economic data from Japan, let me just double check very quickly. We had a few numbers, if I'm not mistaken. Yes, yesterday trade balance came out late at night. Machinery orders were on the lower side. Yep, a machinery order month on month dropped into negative territory. Wow. I mean, the forecast was already there, but trade balance. So what's happening with the trade balance? Let's have a look. Okay, this one remains it's in negative territory now. So last time it was back in February. Now it jumped. Yes, it jumped again into for the second month in a row. It's in negative territory. Right. Okay. That's an interesting one. So maybe the market is right now really kind of keeping this in mind, but for now, it's like I said. For now, it's for now the problem is that the market is kind of the Japanese Nikkei is more submissive to the global events which are happening, and basically what's happening with the U.S. indices, and it's kind of following suit. Now, again, we'll see how these negative numbers, they do matter. Although we're seeing positivity right now, but I think that this reaction is more of a a general reaction to what's going to happen, to what's happening right now in the world. Look, we have geopolitical tensions, but I think that the market is really looking forward towards the Fed because they're hoping that the Fed will, stay strong and not give up to the White House, and that's why we are, like I said, we're seeing some positivity right now. Look, again, we can speculate a lot. For now, I'm looking at this from the technical perspective. I'm watching this nice push to the upside. As long as we stay above the so-called neckline right there, I'm going to continue targeting the upside. For the downside, what I need to see here is I'll take a little bit of a conservative approach, and I'll wait for a drop below the 37,540 zone right here. A drop below the EMAs here could also signal a little bit of a move to the downside. Let's jump into China very quickly. China is flat here. Yeah, we're not seeing much. So we're kind of ranging right now. We're ranging roughly between the 13,000 kind of 288 and 13,555 levels. We're oscillating around the 50-day EMA shown here as the green line. So I'm waiting for this one to exit through one of these sides of the little range. Australia very quickly. Australia ASX 200. Look at this beautiful thing. Boom, to the upside. Creates a new all-time high back last week on Wednesday, and now corrects a little bit lower. So this kind of idea worked out. I talked about this a while ago. I said that if we do pop above the 8,455, I'm aiming for the all-time high. There we go. We hit the all-time high, and we created a new one. Now at this point, look, we had a strong rally, we had a good move, so maybe it's time for a little bit of a retracement. And of course, this is where I will refer to my super Fibonacci levels and let's have a look what's happening here. So basically we're measuring from the lowest point of April to the highest point of this year, and we can see that the 23.6 is somewhere around here, not far from the 50-day EMA right now, but I think that if this does start correct lower towards the 23.6 here, then probably the 100-day EMA would approach this area. Look, like I said, we had a great run, but if you are looking for some higher levels, then yeah, well, let's wait for a push above the current all-time high and near the 8,640 kind of 3 zone-ish. If we can get that move, amazing. Forthcoming higher high will be confirmed. Dow Jones Industrial Average, let's have a look at this one. So again, like I said, yesterday we saw a little bit of negativity kicking in. Let me just refresh my memory on the percentages. So NASDAQ was the biggest loser, followed by the S&P and the Dow. So S&P is kind of always somewhere in the middle between Dow and NASDAQ. Yeah, so it was up to 1% loss. So in general, I would say, yeah, not good. However, we remain above all my EMAs on the daily chart here on the Dow Jones Industrial Average. So in a way, this idea of a curved move to the upside is still valid. Oh, excuse me. But if this is not something that you're happy about, or let's say you're comfortable with, you can wait for a pop somewhere above this 42,000 kind of 900 zone, and then we could go from there. We could start shifting our attention to some higher levels, maybe even to the all-time high. But at the moment, I think that the market will remain kind of careful, cautious, and they will wait for the Fed. The S&P 500 is also resting nicely on a key area of support right here and near the 5,968. We're slightly below the psychological 6,000 zone. So look, I think that we need to see a nice move back above the 6,000 territory in order to go to the upside. NASDAQ 100, this one also declined, but look, NASDAQ is not far from the all-time high, so it would be it would be a shame not to reach the all-time high, because which is currently at 22,222. I'm looking at the main index, and it would be a little bit of a shame. So and again, I strongly kind of stick to my theory of whenever we go for an all-time high, whenever we want to see, let's say, a strong reversal, we normally kind of do pierce through the existing all-time high, create a new one, but then we fail to close below the previous one. We failed to close above the previous all-time high. So I'll show you in this example in DAX right now. But first, coming back to the NASDAQ. So yes, for now, there is still a positive kind of moment here. We can get rid of this rising channel, no longer needed. We can actually recycle this upside line. Let's see if it makes any sense. Not really, to be honest. So maybe, like I said, it's all tentative. It's all actually, not tentative. It's all subjective in a way. Maybe this could be, again, I think right now we're trying to see something where it's not. So that's why I just let's take a simplistic approach. We have a good support area near the 21,611. So far, it's doing a good job. If we continue to trade above that, or maybe actually even better, let me just, ooh, this is much better. Yes, there we go. So if we continue to trade above the 21,465 zone-ish, somewhere around there, yep, there is a good chance for this one to rebound and push back up. But like I said, for now, I am careful about this, and I'm of course, we'll be watching the Federal Reserve today, and yeah. And look, in terms of the Federal Reserve, the guys there are planning to keep the rate unchanged. Yep. So that's, it's not something that already is kind of a given. I think the market already kind of priced that in. What's interesting is the press conference. The press conference when we'll hear the the Federal Reserve's Jerome Powell talk, and what's his projection and in general, because again this meeting is one of the 4 meetings where we get the dot plot, and this is something that we're getting those forecasts and interest rate projection here. You can see that 1 year for 2 years, so that's going to be quite interesting to see here if somehow with the projections rise above these 3.4 and 3.1. It's like I said, it's a moment where you understand that the Fed is worried about inflation. You understand that that they currently have 2 cuts in the pipeline here up until the end of this year, but with oil prices like this jumping higher and also forecasted to go higher, there we could see problems with the headline CPI. We could see the number kind of pushing nicely to the upside later on. And the U.S. inflation, yes, it stalled. It recently stalled. It stalled around 2.4, if I'm not mistaken. Let me just refresh my memory very quickly. U.S. inflation 2.4. There we go. Yes. So it stalled, and that's the worry. And everybody understands that. Again, I will repeat myself. The June inflation number. What kind of a number are we gonna get there? Are we gonna get a higher than the 2.4? I'm kind of leaning towards that idea. That with oil jumping sharply like this, hey. No wonder the Federal Reserve wants to kind of stay, maybe not do anything at the moment. Of course, it's not going to sparkle well with the White House, because the White House wants lower interest rates. In a way, you can debate, like that you need to drop rates, because if you expect inflation to come higher, then maybe you need to kind of, like I said, drop the rates first, so that you would have some room to hike after that. However, if the economy has adjusted already to the 4.5, or should I say the range of between 4.25 and 4.5, if the economy has already adjusted to that, so maybe raising rates to 7%. In order to tame inflation, that wouldn't be such a big issue in that case. So it would be, yes, it wouldn't be very well taken by the equity world, but still, I think maybe this could be, an option here. So that's why maybe they're comfortable with the current 4.5%. Where's that? Let me just get rid of this. So yeah, they're comfortable right now with this 4.5, and for me, like I said, the interesting bit is the December projection. How where it will shift. Are we going to see the Fed a little bit more hawkish, shifting their attention towards rate hikes? Or actually, are we going to see something like, the Fed remaining dovish, like saying, oh, we'll remain data dependent? Something, of course, tells me that this could be the case. But nevertheless, we're going to be carefully monitoring this. So I always say to everybody, like, I understand that, volatility creates opportunity. And, you sometimes think, oh, I'm going to enter a position before the rate decision, and hopefully I'm going to get it right? Look, we all make mistakes, and that's why I always say to everybody that just be careful, wait for the announcements, and then you can do something about it, because at the moment it's, you know, it could be very choppy. We could go maybe deep to the downside, but then, you know, after like a minute or two, we could reverse everything and recover everything and push higher again. So again, like I said, that's why this yes, like I said, it's great, nice, it creates opportunity. You can, you know, maybe try to scalp it or if you want to, but again, you need to know what you're doing. So just going randomly, so it really then becomes like a casino. So long story short, keep your eyes on the Fed today. Keep your eyes on the US dollar, because look at this. Now, I talked about the US dollar a while ago, and basically with the, well, a while ago on Monday actually, and actually I talked about it yesterday as well. So the US dollar is, of course, also keeping, or US dollar traders are also keeping a close eye on what's going to happen today with the Fed. So we have some key areas of some key areas of support here established. So yep, this is one of those, the 97.92 zone, or in general, if you want to round it up to 98, fair enough, be my guest. But still, you know, I would prefer to see a drop maybe somewhere below the 97.5 zone in order to get comfortable with lower levels. But at this recent push higher, is kind of indicating that maybe the dollar, you know, the dollar bulls do not want to surrender, and hey, you know, we could see maybe a break of this downside line taken from the highest point of February. Again, at the moment, I would say, you know, if the Fed suddenly starts talking about that they're going to be pushing further and further away the cuts, then this could be a positive thing for the US dollar, and we could see, you know, a nice push higher there. But again, is this something that the US administration, current US administration wants? Well, I think that what they really want is that they want to keep the US dollar on the lower side for now, because again, they want, first of all, they want to you know, make other country exports more expensive, and you know, so that the U.S. Consumer would be buying less and less of outside goods not produced in the U.S. And another thing is that also, given the current military expansion, certainly the weapons which are bought by other countries, they're a little bit more affordable. You know, weapons bought from the U.S., so they're more affordable, and yeah, we're seeing, you know, a huge increase in sales of weaponry, in the U.S. weaponry, and of course, you know, companies like LMT, which are gonna, you know, pop a little bit later probably because of the wars. You know, we have your Raytheon Technology, RTX Corp, continuing to rally, and you have your this one, there we go. Also, you know, nicely moving, because again, conflicts are profitable, and everybody, you know, human lives don't matter. It's the money that we're more after, right? Yeah. So anyway, DXY, the dollar index here, like I said, it's a very nice setup in my opinion. We're waiting for the results from the Fed. Let's see what's going to happen there. The German index DAX, and this is what I promised to show you. Monthly chart. Look at this. Sorry for the arrows here a little bit. Let me just get rid of those maybe for now. So we did create a new all-time high this month. We did shoot up nicely. But you know, look at this is the typical scenario that I keep on telling you about, that when we go and create a new all-time high, but then we fail to stay above the previous all-time high. So this to me sounds like more of like a bearish indication, and also, you know, and maybe this could lead to some lower levels going into July. Like I said, this is just a little theory, which could be supported also by the fact that we are getting closer to the 9th of July, which is the end of the deadline of the 90, or the end of the 90-day pause on the tariffs, which were announced during the Liberation Day. Yeah, this is, like I said, that's where the tricky bit comes in. So, what's going to happen next? At the moment, we're seeing a very nice hold up above the 50-day EMA and near this key support zone, which I have marked here between the 23,275 and 380 or 390 levels. So yeah, for now we're stuck here, and in order for me to go lower, I would need to see a drop below this 50-day EMA, and then I'll consider a move towards the 100-day EMA. And for the upside, I would prefer to see a push above the 23,740 zone here. If I can get that move, then yes, I'll target. Again, I'll go for the all-time high. Quick update on the UK side here. Look, lower inflation numbers from UK seem to act quite positively here for the FTSE 100. So, hey, we came very close to creating a new all-time high on Monday, but just failed to hit that all-time high. Once again, I'm going to target the all-time high unless we start falling somewhere below this 8,000 kind of 800 zone. If we do fall below that, I will consider a little bit of a move lower. Now let's jump into the Forex world very quickly, ladies and gentlemen. I'll jump into commodities in a bit. The Forex world, so we're having a little bit of a mess here on AUDUSD. You know what I really want to do? I want to remove all the drawings. Look, somebody might say, hey, maybe we're forming something of a something like a channel, a rising channel. But you know what, maybe it's actually more of a rising wedge pattern, which according to all the TA rules tends to break to the downside, sorry. But in this case, we have a prevailing trend to the upside. So maybe this is going to be the opposite, so maybe we'll see a breakout higher here at some point. That said, if the US dollar rallies, then yeah, we could see this one breaking out to the downside here. But either way, to be honest, I need to see a drop below my EMAs here on the daily chart, and then I'll go from there. AUDJPY, one of my favorite ones, and this is my, just in general, it's a risk-on, risk-off monitor tool, and yes, we're seeing a little bit of a stalling moment. So the market is really trying to understand which direction we're going to go next, and it's very, very unclear. It seems like on one hand we're near all-time highs, so maybe everything is somewhat positive and we should be moving higher, and AUDJPY should also be moving higher, but somehow the pair is not really jumping above that 95.75 territory right here. If we can get that move, then I'll go for the upside, but at the moment it is just stuck. So we're keeping a close eye on it, and then we'll go from there. For the downside, a drop below the 91.86 territory is required. NZD USD, similar story as with the Australian dollar here against the US dollar. So this one's also a little bit messy. Maybe it's forming something of a rising wedge. Now this one is a little bit more clear in my opinion, but either way, we're waiting for a clearance. USDJPY. So, USDJPY. Now, this one's also an interesting one. We are pushing above the 50-day EMA. So, what I said to you before, that if we do climb above the 50-day EMA, I'm going to consider a little bit of a move to the upside. And my next target will be the 100-day EMA and the 200-day EMA. We do have a good area of resistance around here, which is the highest point of May. Around the 148.65, and then we'll then we'll go from there. For downside, look, very straightforward in my opinion. I think a little break here of this upside line, or actually even better, a drop below, somewhere below this territory, this 142.40 zone. If we can get that drop, yes, I will consider a little bit of a move lower, because look, this here is a very strong area of support, as you can see yourselves. So let's not ignore it, and let's keep this around here. So this is, like I said, this is where my next target could be if we do fall below the 142.40 zone. US dollar against the Canadian dollar. So we remain below the 1.3686 territory. So okay, that's great. And if we do If we do continue to trade now, okay, this downside line is a little bit on the tentative side, so it's not really something, you know, that I am very accurate about, or, you know, like I'm very happy about. But what I'm more happy about is the potential falling veg idea, which kind of is already now showing that we're breaking the upper side. So basically we're kind of you know, going along with the textbook, and we are breaking the upper side of the falling veg. We're now retesting the upper side of it, so in a way this scenario could happen. So in a way there's a lot of things pointing right now towards slightly stronger dollar. Let's see if that's going to be the case. In general, also from the very short-term perspective, you can keep an eye on this little hurdle here, this 1.3686, and as you pop above it, may increase the chances for this pair to travel a little bit more to the upside. US dollar against the Swiss franc very quickly. So again, yep, we're seeing a little bit of strength in the US dollar, but either way, do not exclude the downside scenario yet. EURUSD, there we go. We're a little bit on a roller coaster ride. We created a new high for this year. We cleared the previous high near the 1.1573, and then look at this. Boom, drifted back below the previous high of this year. And that's going to be an interesting one. Look at this. This is a monthly chart. We have been running nicely to the upside for some time now, and maybe this is the point where the US dollar could take the upper hand. Again, a lot of things pointing towards slightly stronger US dollar, but is that going to be the case? Let's not rush into things yet. GBPUSD, what do we have here? We broke the upside line. We're now, seems like we want to go a little bit lower, so hey, that's what I'm going to do. That's what I'm going to aim for. This 1.3444 zone, another drop below it could, yes, open the door to some lower levels. And by lower levels, I mean this upside line taken from the lowest point of January of 2025. Let's have a look at the commodity world right now. Gold. Look, gold had a great moment, and gold found good resistance near my key important area of resistance, which is around the 3,430 zone. Yes, we overshot it by a little bit here. We created, you know, we hit these levels here, the 3,430, 37. And we then kind of drifted back down, and we stayed below this whole key area of resistance. Let me actually mark this for future reference. And of course, we have, you know, we're doing this very simple. We're approaching this from a very simple perspective. So if we do pop above the 3,430 zone, I'm leaning not only for the all-time high, but also leaning for a new all-time high as well. We can say that, you know, maybe gold is actually forming something of an ascending triangle pattern. Well, it could be the case, ladies and gentlemen, and it could be yes, it could be a nice idea, but hey, let's not rush into it. I'll believe it when I'll see it, when I'll see the break of the upper side of this potential ascending triangle pattern. At the moment, it's a little bit weak, and don't be surprised if we see maybe a break of this steeper upside line taken from the low of the 15th of May. If that's the case, if we do get that move, then my next target is the 50-day EMA here shown as the green line. Silver, very quickly, silver, very good move. There we go. I'm targeting this 37.5 zone still, so you know what, I'm going to stick to it. This level, if you want to have a look, basically the 37.5 is somewhere near the highest point of February of 2012. So that's, look how much we have traveled already. Look how much it's great in a way. You know, if you held to silver, congratulations. You know, you're doing quite well, I would say. Let's see if, you know, if this cannot really reverse back to the downside. Let's jump into US oil, which is the WTI oil. Look, we had a hold up below these EMAs, these downside lines here. One is taken from the highest point of September of 2023. The other one is taken from the high of the, is this the highest point of October? No, the high of the 20th of October, sorry. So we're currently stuck here, and I would say I need to see a push above these trend lines. If I can get that move, I will consider a push to the upside, where I will target this this area right here around the psychological $80 mark. This is my, actually this is where I need to drop the arrow a little bit, make it a little bit more modest. There we go. So yes, this is my game plan. Let's see how this is going to play out. At the moment, of course, the geopolitical tensions are kind of pointing towards more higher oil prices. Let's not rush into things. Sometimes what is very obvious might not actually happen. Natural gas, there we go. We pop above the 3.84 zone. I talked about this. There we go. So now I'm going to continue targeting the upside as long as we stay above this barrier. If we stay above this barrier, yes, I'm going to continue targeting the upside. Pretty straightforward, basically. Let me just jump into platinum. I actually forgot this one's pushing higher. Palladium also making its way nicely to the upside. Right. Okay, ladies and gentlemen. Now let's jump into the crypto world for dessert. Bitcoin. Bitcoin is on a roller coaster ride here, and what do we need to do? Exactly, remove everything and start fresh. What we see here so far, the 50-day EMA is providing fantastic support. It's acting, as a very, very strong area of support. So as long as we stay above that, I will continue targeting the upside. So something like this. But don't forget that maybe, just maybe, we are coiling up here a little bit. So yep, look, again, it's very subjective to what I'm drawing. Because again, maybe it's this way, maybe it's actually the other way around. So like this is something that you can draw. In a way, maybe this could make sense because with the lower side of this triangle is kind of coinciding with the 50-day EMA, and then yeah, we'll go from there. For the upside, I would say I need to see a push above the upper side of this triangle, and then I'll consider some higher levels. Then I'll consider even a possible move to the all-time high, or maybe a new all-time high. Let's see, who knows. There we go. So a break of the 112 zone could be ideal. Bitcoin Cash. Now this one's looking quite positive, to be honest. And look at this. I mean, so far so good. We're pushing away from the EMAs. My EMAs here on my daily chart. We cleared my 460 zone, and yeah, it seems like we want to continue pushing further north. Well, that's the as long as we stay above the 460 zone, I'm targeting that psychological 500. Why not? Why not? Everything's looking good. However, again, the problem, the US dollar. If somehow that pushes higher, if somehow that accelerates, then well, you could expect the cryptos here, these cryptos against the US dollar kind of drifting a little bit lower. Ethereum is interesting. Remains kind of modest here, but at least remains above this upside line, remains above my EMAs. So hey, for now, I am just kind of gonna stick to the upside, to be honest. ETCUSD, this one's also an interesting one. So yes, we're below all the EMAs on the daily chart. So in a way, it's pointing more towards the downside. Ripple is stuck. It's really stuck. It had a good moment on Monday, but then faded away very quickly. So look, the 200-day EMA is the interesting one, and we're currently, we're currently above it, but very close to it. So if we, like I said, if we see stronger US dollar, then we could see a nice decline here, a drop below the 200-day EMA. For the upside, I need to see a break of this downside line. A break of this downside line could attract a few more buyers into the game here. Litecoin, very quickly. Oh, this one's very bearish, to be honest. Looks like a nice descending triangle pattern. Yeah, so kind of supports the idea of a downside move. Right, so okay, so this here looks okay. Look, it's somewhat of a descending triangle pattern because we have a little bit of a gap here, so that might not be the most accurate descending triangle. Maybe it's something else, but in general, yes. If we measure it from here, then maybe this is the case. But either way, for the upside, I need to see a break, not only a break of this downside line, but also a push above all the EMAs. But for now, I'm cautiously bearish. Dogecoin, also looking at a little bit bearish, to be honest. It's looks it's stuck near this area of support, the 0.1682. So if we get a nice drop below that, then yep, I will move further south. Let me just mark this for our future reference. Polkadot, very quickly. Polkadot also continues to drift lower, to be honest, and it's not really, it's not really kind of very bull friendly at the moment. So yes, everything is pointing more to the downside, and well, let's actually stick to that, because again, I do like this area, the 3.25-ish zone, but also at the same time I like my EMAs. If we do start clearing those EMAs, then I will go to the upside. And finally, Tron. This one had a great pop. Look at this on Monday, boom, to the upside, but then really quickly, sharply reversed back down, back below this 0.2822 zone. Look, I think that now we can mark this territory here, this 0.2950 zone-ish. Yep, I think that's a good target. So if we do clear this 0.2950, then I'll go higher. But at the moment, we're very close to this key area of support. If that gets cleared, ladies and gentlemen, we could see a little bit of a move to the downside. So that's it for this session. I'll have to wrap it up here. Ladies and gentlemen, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. I really do. So thank you. As always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine, especially if you join my next webinar on Friday. This is 7 o'clock GMT time, the usual. But as always, you can find more information on our YouTube channel, and which you can see the info in there. Ladies and gentlemen, thank you very much. Be careful today, because we have the like I said, the Fed interest rate decision. The market could be volatile, so try to protect yourselves. Thank you very much, and bye bye.